SoFi Technologies. SoFi Technologies is an $11 stock. The stock is up 60% in the past year. It has performed very, very well. Okay. Now, when it comes to SoFi, this is a company that, in my opinion, is kind of at the cross sections of new age banking and fintech. They're digital first. They don't build branches like the traditional banks of like JP Morgan, Wells Fargo, Bank of America, those sorts of guys. No. They're digital first and foremost. They also will essentially be kind of the middleman for a lot of loan activity. And so that's where they kind of come in a little bit more like a fintech as well. And they do a phenomenal job attracting a lot of the younger generations, millennials, Gen Z. And I think even like a lot of the Gen Alpha folks will sign up for SoFi long term. Okay. Now, when it comes to SoFi, this has been an absolutely extraordinary growth story of a company. Company can grow year in and year out and has very high growth rates. And that's despite everything has been going on. High inflation, the student loan pause, everything like that has been going on. And yet SoFi has been able to still put up great numbers year in and year out and have tremendous revenue growth. And really that's not expected to slow or stop anytime soon. The company should continue to grow at a double-digit clip when it comes to revenue for years and years to go in the future, if not decades to go in the future. And the reason being is they just continue to attract more and more members as their members' net worths grow, right? Because they attract a lot of young people, especially to SoFi. And they get more and more people in the ecosystem, have more and more products to sell them, right? Somebody might basically try to take out a personal loan through SoFi and get a much lower interest rate so they can pay off a credit card, let's say, for instance, right? But then that customer might end up taking out a car loan with SoFi long term, or a home loan, or many other products, okay? And so SoFi is able to attract people in an ecosystem and then have them have other products, right? Now, when it comes to SoFi and why I think this stock's really become such an attractive stock really in the past year is this used to be a money-losing company. They used to lose a fortune with this company. But recently they flipped over to the magical side of profitability. And this is a huge deal for SoFi, not only in the short term, but for the long term of this company. No one at the end of the day wants to own a bank that loses money. Like, if you own a bank, they should make bank, right? They should make profits. And so now SoFi's flipped over that profitability side, and that's huge for this company. Now, additionally, if you know anything in the banking space, what is so important? The thing that is arguably the most important is what is your balance sheet looking like, okay? And if you look at SoFi's shareholder equity, it's up and up and to the right. And this is so important. Your balance sheet, your shareholder equity is everything when you run a bank, right? Because you got to understand, you will go through recessions, you will go through bad economic times, and when it comes to becoming a successful bank, let me put you guys on game on how you actually build a massive bank. If you want to know how like JP Morgan was built and became this massive juggernaut, here's how you do it. You make it through the recessions, okay? You make it through the crashes. You get out to the other side, you usually acquire other assets for pennies on the dollar, and then in those good economic times, you get more and more loan activity, you continue to attract more and more members, and you build bigger and bigger. Then the next crash happens, the next recession happens. You get through that, out to the other side, and you grow bigger and bigger and bigger. And that's how you become a giant, like JP Morgan, let's say, for instance, has become. So for SoFi, it's just all about getting through the recessions, getting through the bad economic times, making it out to the other side, right? Making it through the 2020s, making it through the 2022s, right? Making it through the great financial crisis, 2008, get out to the other side, prosper, grow your business bigger and bigger and bigger, right? Now, this company, you got to understand when you're ever buying into a stock, the CEO is so important. I feel very comfortable with the gentleman that leads SoFi, Anthony Noto. He's a CEO of SoFi, has been the CEO for many years now at this point in time. He used to be a managing director at Goldman Sachs, one of the most respected financial firms, if not the most respected financial firm in all of the world, right? He used to be the chief financial officer of the NFL. And before that, he was a COO, the chief operating officer of Twitter way back in the day. So when it comes to SoFi, I think this speaks volumes because this is a stock I own in the public account. I own 3,700 shares. I do own in some other portfolios as well. I'm up 66% on this stock. And I'm still willing to go out there and buy it. I still believe this stock is a steal deal. And so the fact that I could be up, because you gotta understand, it's easy for me personally to buy a stock I'm down on. If I buy a stock and I'm like, this is a great deal, and the stock goes down 10, 20% right after I buy it, that's easy for me to buy more and more shares because I already thought it was a deal before I bought, Now it's down 10 or 20%. It's easy for me to buy. When I'm up 66% on a stock and I'm still like, this stock is still a steal deal, that speaks volumes. And that's how I feel in regards to SoFi. And you got to understand, SoFi today, the reason I am investing into SoFi is because I believe that over the next decade, SoFi can become a financial giant. When we talk about financial giants in the banking space, we're talking about companies that will have $100 billion plus of market capitalization. SoFi today is a little teeny company in terms of market cap. We're talking a little over a $10 billion market cap. And I believe over the next decade or so, this is going to become a company that becomes a financial giant, $100 billion plus market cap. That's why I'm willing to place some chips on the table in regards to financials. Now, in regards to betting on a bank or anything in the banking space, I don't want to take too much risk. So you won't see me invest crazy money into it. But would I feel comfortable investing $50,000 or $100,000 in a SoFi? Absolutely. Would I feel comfortable investing $1 million in a SoFi? No. There are certain companies I would feel comfortable investing in $1 million into. SoFi, because in the banking space, what if we had some sort of massive recession, Anthony Noto over-leverage a company? Doesn't look like he's doing that. But what if he did, right? That would be problematic. But from what I see, the future for SoFi looks very promising, and so I'm willing to put some chips on the table. And so for me to invest $50,000 or $100,000 in a SoFi, I feel very comfortable with that, okay? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. SoFi. So, what's going on with SoFi? Well, what's going on with SoFi actually has very little to do with SoFi. So basically yesterday, Vlad over at Robinhood showed off some new things that Robinhood wants to do, right? Including adding, as you see the headlines here, Robinhood keeps adding services. Banking and wealth management are the latest. Robinhood is moving into banking services with luxury perks such as same-day cash delivery. Robinhood unveils plans for new banking products, right? Boom, 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 boom. So they're moving into banking territory, right? Which this has people very worried about SoFi, because SoFi operates in the banking space, right? Robinhood CEO sees Amazon-like subscription model as path to loyalty in financial services. And so Robinhood CEO Vlad is bundling more services into the company's $5 a month subscription service. Listen, and I believe they mentioned Costco as an inspiration here. I think it's a great move for Robinhood. Great move. I have nothing bad to say about Robinhood in regards to the situation. I think it's a natural next extension for them. I don't know how successful they'll be. Like, it's one thing to announce something. It's another to be super successful at it, right? Because you, as a company, you can launch a million different things, right? You know, like if I recall, you can get your eyeglasses at Costco, can't you? Can't you get your eyeglasses at Walmart, right? Does everybody just go to Walmart and Costco to get their eyeglasses? I don't think so, right? You know, you can get water at Costco and Walmart. Does everybody go get their water at Costco and Walmart? No, actually a very extremely small percentage of the population does. And so, like, people get all caught up in the short-term stuff and like, oh, Robinhood announced this, and they just think like, I don't know, everybody in the world's going to go sign up and start using banking products that are with Robinhood. No, I'm not leaving my bank. My wife's not leaving her bank. Like 99.9% of the people watching this video right now, you're not leaving your bank to go over to Robinhood and use their banking services or their robo-advisors or whatever that they announced, okay? None of that stuff. That does not mean it's not a good move for Robinhood. It's absolutely a good move because they're just in a market share game. They're trying to get little bits of market share here and keep adding more and more at the end of the day, Robinhood's goal, I mean, they have a few goals, but one of their big goals is they want more and more assets in Robinhood, right? The more assets they have, the more products and services they can sell you. It's a natural extension, okay? Now, with that being said, that gets into SoFi, right? Because there's a belief like, oh my gosh, Robinhood, like, you know, and it's really a one-day belief, but it's like, oh my gosh, Robinhood's announcing banking-related products. Oh my gosh, this is the end of the world for SoFi. Well, what if I told you that SoFi allows you to invest through it? What if I told you you could invest in stocks, ETFs, IPOs, all types of things? You even do automated investing through SoFi. What if I told you that? Does that mean the end for Robinhood? Gosh, everybody's going to use SoFi? No. But it's a smart move for SoFi. It's smart that they allow that, right? So some people can use that. If they want to invest through SoFi, they can, right? And it gives SoFi an ability to, you know, at the end of the day, have more customer data, have more assets on the platform, those sorts of things. And so just because SoFi allows you to trade stocks does not mean, oh my gosh, everybody's going to switch their Robinhood accounts from Robinhood over to SoFi. Doesn't work like that. It's just a good strategic move. And so the ridiculousness today with people selling off SoFi stock is very immature and is very uneducated on how the stock market, how stocks work, how companies work, and really how business fundamentals work. Because just because you announce something does not mean like Amazon tomorrow could come out and announce they're going to have a full suite of banking products. It does not mean everybody's going to go switch to Amazon to use their banking products. It's not the way this works, okay? So just ridiculous, right? And when it comes to SoFi, this company's had an incredible growth trajectory. They should continue to have an incredible growth trajectory over the next several years, right? Anthony Noto just has to always get the company through recessions, out to the other side, and you know, boom in the good times, right? But at the end of the day, if SoFi doesn't hit their numbers over the next few years, it will have nothing to do with Robinhood. That will be like Anthony Noto and SoFi like didn't execute well. If this doesn't happen, it'll have nothing to do with Robinhood. So the fact that people were freaking out over Robinhood today is ridiculous. But, you know, nowadays nothing surprises me in the stock market. So I'm not surprised that the stock was down 6% today because everybody was freaking out over, you know, Robinhood. Oh my gosh, they got some banking products. Oh my gosh, so silly. Okay. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Alrighty, next one here. We'd be buying on weakness right now.
America Private Bank for some answers. Good to see you.
You too, Scott.
That's the key question. What's the answer?
I think so.
It's run its course?
Yeah, I think it's run its course. You know, everyone's been saying there's no V-shaped recovery here. It's probably a jagged V. The bottoming processes are underway. But here's what we think is the topper, which is sentiment is so poor right now.
Yeah.
And at the same time, you're seeing no new lows from the previous lows on a 52-week basis. Credit spreads tame. You've talked a lot about that. The puzzle just is not there to suggest that things are going to get worse. Yes, there's a lot of uncertainty, a lot of bearishness. There's a lot of CapEx on their hands at this point. But what no one is talking about is the potential positive surprises that are out there, like earnings season.
True.
So you actually think earnings are going to be good, and you think the guidance is going to be good?
No, I think the bearishness is so poor that it's expecting that. And I think that any positive signs that says, you know what, we're not seeing that much further guidance lower. We're just seeing some stability. And yes, we know what's coming down the pike. And leadership changes are going on at the same time. So if you get a leadership change, which is happening, it's been happening for months, and you get all this bearishness, what happens next? You see these possible green shoots that occur, and it catches the market by surprise. We've seen this time and time again, especially in March.
You know who's not talking about the good? The administration. They're not talking about the good. What's the good? Deregulation and tax cuts. That's why the market can't see through this fog,
Right.
and get to the other side to start feeling jazzed up about what is allegedly coming down the road.
Right. Yeah, I think that's a good word. It's fog. Fog is out there. It's probably extended a little bit more than people want, too, into the summer months. But markets don't wait for that. They're going to start discounting things in the back half of the year in the next month or so. And that could be deregulation. It could be other surprises in the extension of the tax cuts that we just don't talk about right now. And then ultimately what happens next year. I know we're getting ahead of ourselves yet, but that's the real productivity enhancement is next year, not this year. There's still a lot of rules to be understood yet, but the markets are discounting, all the bad right now, and they're extrapolating it out. And the consumer, this is where it gets interesting. Everybody extrapolates the bad news and all of a sudden says, well, the consumer is going to start to see that and the soft is going to go into hard data. Things are muddy right now, but the consumer is resilient and we expect that to continue.
Why?
Jobs. It's all about jobs. We don't see anything out there that suggests jobs are going to all of a sudden in the next 6 months just create the non-growth out there that everyone is expecting.
What happens if you have a bad number on Friday?
I think it'll ultimately be more noise and it'll continue this momentum to the downside. So that's why we expect this like sawtooth bottom, not necessarily what we've become accustomed to, which is this V-shaped recovery.
Okay, so it's, in a sense, it's...
So one thing I'll push back on jobs is one very important thing everybody watching this has to watch as this year goes along, okay? Super important everybody keeps an eye on this. It is the home builders. And what happens with the home builders numbers as this year ticks along? We know the home builders had a phenomenal year last year. They had a phenomenal year the year before and the year before. Like the home builders been on a roll it really started even prior to Rona. Like the home builders have been booming for a while. Recently, as in the past couple months here, this is the first time the home builders are starting to get worried. Okay. And if you look at the home builders numbers, I'm getting emails because I'll sign up for a lot of like home builders email lists and things like that essentially, right? I love to look at model homes and all that stuff. And so I'll do that a lot in different places, right? And I'm starting to see some home builders sending me emails discounting like $100,000 off a quick move, $50,000 off a quick move, $15,000 off a quick move in. $150,000. I think I had one last week. It was a multi-million-dollar house. They were cutting like $200,000 off a quick move-in. Listen, the home builders haven't been doing this in these markets for years in terms of straight-up price cuts. That must mean their business is pretty soft and they're a little worried, especially when you're going into springtime. So that's the one area I'd watch. Now, the reason that's going to be important is if we're talking, I always tell you guys, a new home being built is what? Is the best thing that could ever happen in the U.S. economy. So many jobs are created when a new home is built. It's ridiculous. The amount of companies that make money off that, oh my gosh, it's insane. And if you need any proof, walk around your house and just think about how many companies, when that home was built, whether that home was built a year ago or 100 years ago, think about how many companies made money off of that home being built and how many different jobs were created from that one home being built, right? Unbelievable. So if the home builders have a really bad year with home sales this year, right, and then that was to lead into next year as well, that could definitely hurt the economy and definitely hurt jobs and definitely, cause a big slowdown. But if the home builders are just okay, then we're okay. The home builders don't have to necessarily always be in boom times. They just got to be in a good place. They're getting enough new orders to keep their workers busy, all the independent contractors they use, and whatnot. And boom, you're fine. But if you saw a massive slowdown there, like great financial crisis type slowdown in regards to new homes being bought, then we're in trouble. But as long as that doesn't happen, then, jobs are going to continue to be there and you're fine in the end, right? So something to keep in mind there.
That it's good, right? People are too negative. What would you buy now if you were trying to look out through this fog?
So if you're an investor that, generally speaking, is usually fully invested and you've got cash coming in, we'd be buying on weakness right now. You want broad market exposure?
Agreed.
Look at the equal weighted S&P to add to what you already own. If you're looking at sectors, financials, oversold. Consumer discretionary, the worst quarter in a really long time.
Yeah.
Oversold.
For a reason.
Absolutely for a reason, but that's what gives you the bargains to buy into a sector that should actually show you that things are going to be stable.
So by equal weight, does that mean you don't think tech is going to lead from here?
That's a great question. Tech is splitting. Price to growth has come down to attractive levels for some of tech. That should be more in the software. Cybersecurity area of tech should be the new leaders over the next few years. It's kind of been taking a back seat to the infrastructure end of artificial intelligence. So instead of all tech, it's now splitting, and you'll see some leadership in tech, but not completely across the sector.
I don't know if I agree with that necessarily. I mean, the type of stocks I think are going to lead over the next, we can just talk 2 years, okay? We don't have to talk about the next 5 years, 10 years. I think the stocks that will lead over the next 2 years are going to be stocks like Amazon, are going to be stocks like Meta. I think Google's actually in a really good position because, I mean, everybody's gotten so bearish on Google with all the AI stuff and whatnot, right? And I think their numbers will continue to come through, and they just have so many different successful business lines that company is insane. I think those will still be a lot of the leaders. I think you'll look at a stock like AMD over this next couple of years and people realize, oh my gosh, like how did we miss out on in 2025? You know, like it was barely over $100. Like how did we miss that, right? And so I think you'll see some of those stocks be leaders. You know, even a stock like MU has me intrigued recently. I don't usually like a commoditized business model like MU has, right? But I will say their memory chips have gotten a lot more sophisticated over the years, and it's not as commoditized of a business model as it used to be. And even a stock like that, I wouldn't be surprised if it's a leader. Like, could I see MU eventually $150 a share or 200? I wouldn't be surprised at all. So, you know, that's where I would look for a lot of leadership. Not to say cybersecurity stocks like he was talking about, they're bad. It's just, I think there's a lot of other really attractive opportunities out there from a lot of stocks that, you know, are the big techs that people look at and they're like, you know, those are the same stocks that have been kicking butt. They're going to continue to kick butt? Yeah, they are. You know, like, you know, people have probably been waiting on Amazon's downfall for 25 years now, you know, and the stock still performs phenomenal. You know, look at every 5-year, 10-year basis. Stock tears it up. You know, same thing with Meta, right? It goes through short-term bouts of volatility, but at the end of the day, the company gets bigger, more successful. A lot of times you don't have to play the game on the most complicated level. A lot of times it's the most obvious ones that are right in front of your face that are still positioned very well.